As the United States stock market prepares for another trading day, futures are pointing lower, reflecting investor concerns over the launch of a new artificial intelligence model by Chinese startup DeepSeek. This model is being touted as a potential competitor to OpenAI's chat generative pre-trained transformer, raising questions about its impact on the technology landscape. Traders are also bracing for a significant week ahead, with the Federal Reserve set to announce its interest rate decision on Wednesday. Market sentiment is cautious, as the Federal Reserve is expected to keep rates unchanged following a series of cuts last year. By early morning, the Standard & Poor's 500 futures have dipped by 1.7%, while the Nasdaq 100 futures have fallen by 3.0%. The Dow futures are also down by 0.9%, indicating a widespread pullback in anticipation of key economic events. Investors are particularly interested in how the Federal Reserve's policy decisions may influence market momentum, especially after a robust performance in January, where the Standard & Poor's 500 gained about 4%. However, the focus remains on inflation, which continues to hover above the Federal Reserve's target. Adding to the uncertainty is President Trump's recent tariff threats against Colombia, which has further complicated trade relations. While Washington backed down over the weekend, the potential for renewed tariff policies looms large. As Wall Street digests these developments, all eyes are also on upcoming earnings reports from major tech companies this week, including Meta, Apple, Microsoft, and Tesla. The results from these firms could either bolster or undermine the current market rally. With the Federal Reserve likely to maintain a cautious stance on interest rates, strong earnings from these technology giants could reignite investor optimism. Yet, analysts warn that any disappointing figures could spell trouble for the market, which has been heavily reliant on these stocks. Compounding the situation, the launch of DeepSeek's artificial intelligence model has drawn skepticism, raising concerns over its potential to disrupt the artificial intelligence sector. Analysts suggest that the excitement around artificial intelligence could be tested by this new competitor, adding another layer of complexity to market dynamics. In China, the economic landscape is also shifting, with the manufacturing sector unexpectedly contracting in January. This contraction is a troubling signal for global markets, as it suggests a slowdown in one of the world's largest economies. The Manufacturing Purchasing Managers' Index, or PMI, fell to 49.1, indicating a contraction, while the non-manufacturing PMI also saw a decline. These figures highlight the challenges facing Chinese businesses amidst ongoing trade tensions. Meanwhile, oil prices are also feeling the impact of these global developments. Traders are reacting to President Trump's recent comments urging the Organization of the Petroleum Exporting Countries to lower crude prices, which has resulted in a slight dip in oil futures. As of early morning, United States crude futures have fallen by 0.4%, while the Brent contract has declined by 0.5%. This reaction reflects market sensitivity to both domestic and international economic indicators. The combination of a potential contraction in China's manufacturing sector and fluctuating oil prices underscores the interconnectedness of global markets. Investors are keenly aware that these factors can influence United States market performance. Thank you for joining us for this market update. Be sure to subscribe for more insights as we continue to follow these stories and their effects on your investments.